Welcome back, and we're discussing the crude realities. It has been a volatile day, week, month, and a couple of years actually as far as the crude oil prices go. Let's get in the conversation. Energy expert Narendra Taneja, and he joins us live on the show as well. Mr. Taneja, hi, good to see you. What's your sense really coming in for the crude oil prices now? Because the big event awaited is now out of the way without really yielding any result. Kuwait strike is something that seems to be supporting the prices right now. But what would you want to watch out on the crude prices from here on?
Well, my view is that, you see, demand and supply has done what demand and supply fundamentals have done, and market forces have done what market forces have done. I think there is a kind of, a desire on the part of big oil producer, both OPEC and non-OPEC, that they want to put in place some kind of, system or some kind of initiative so that the prices can go up. My sense is they really don't know what to do, but they feel that they need to do something about it, to put in place some kind of maneuvers, political maneuvers, market maneuvers, production cut maneuvers, and all the very fact that they agreed to meet. Not only OPEC, but non-OPEC too. They agreed to meet. Norway also sent observers. There were some other countries too present there. And they agreed to meet in the full world view means that they want to do something. And my personal view is that I don't really think the meeting was a failure. I think it was the launch of a process. They have launched this process. Iran also made a statement, and that's very significant. They say the talks must continue because Iran knows prices go up, they will also be the beneficiary. But in the way, of course, came the Cold War between Iran and Saudi Arabia. But I think they will continue to talk, and I'm sure they will talk not necessarily in the form of a big summit like in Doha. But my sense is that, this is the beginning of a new process. Led by politicians, led by politics, but eventually I think they will put in place some kind of maneuvers, and you will start seeing crude oil prices moving in the northwardly direction, and we will probably see crude oil prices in the region of about 46, 48 average by maybe October. And my information is this is what exactly Saudis want to achieve, and Russians seems to be quite okay with it, and Venezuelans will also go along with it. But of course then we all believe and we all know market forces of course are supreme. But at the same time we all know that markets forces alone don't play the biggest role when it comes to crude oil prices. And let's not forget one thing, at the same time, how the US is going to react to all these initiatives and the efforts of OPEC and non-OPEC to put in place these maneuvers, because this is presidential year in America, and I think American government would not be very happy if oil prices go beyond a certain limit. But I think 46, 47, I think we are heading in that direction, at least for the period between, let's say, October and December, and after that, of course, 2017 probably may cross the $50 per barrel. But this would not happen unless and until there is a kind of political intervention on the part of both OPEC and non-producing countries, and they put in place some kind of maneuvers which deliver the desired results, and which they can also sell to bigger consumers as well as to the big players of the global economy. Because I've always said that oil prices, when they're too high, they're bad for importers, but also very bad for the global economy. But when oil prices are too low, they're also equally bad for the global economy, including big importers like India. We have seen the impact of that on our exports, for instance.
On the producers and consumers, and of course countries like us as well. Tushar, what's your sense? Because Mr. Taneja brought out that point about US as well, and there is renewed optimism in the US economy, but the Fed interest rate hike is something that impacts all of us, and there's a meeting next week as well. What are you reading into that?
Well, what we think is, the American government doesn't have any role to play in this. In fact, how we look at it, American government is more important outside of America. Inside of America, nobody listens. Even Apple doesn't listen to it. So you do not expect any change of policy. America doesn't have a policy. It's an open market. It's a free market. People will do what is economical to do. The way they have cut costs, they have cut costs 5% every month, month after month. So the costs today are more than half of what they were just a year back. This aggressive cut cannot continue forever, but it is a reality in front of us. What we expect is that this process, Mr. Taneja is right, this is the start of a process, but probably by the end of the year, this process is not really needed because the demand is going to catch up. Now the question is, where is demand going to come from, or where are we going to see it? It's coming in the gasoline side. People are driving a lot more across the world. People are driving more in countries like Korea. We have never seen in history or in the last 10 years demand growth in Korea. We have always seen very strong demand contraction in Japan. This year we are seeing only 0.1, 0.2% contraction in gasoline demand. Jet demand, Korea is seeing 10% demand growth. Japan is seeing strong growth. China is seeing phenomenal growth.
Tushar, it's nice to know all you guys talking so optimistic about crude oil prices going ahead, but what's your sense on the prices really? Because we've seen Citi talk about $35 off an average, Oppenheimer talked about $40 off an average, Mr. Taneja feels we might see 47 in this year itself. What is FG working with in sense of a number here?
Before the end of the year, we go to 50s. Next year, we go higher. Average should be around 55 next year. But there would be times when it pops to the 60s level and then comes back. But the 50s are a range which is expected before the end of the year.
Let's get in one more voice then, and joining us now is Azleen Ahmad, editor Crude Oil from Argus Media. She joins us on a phone line as well with her views. Azleen, hi, good to have you as well. What's your sense on what's happened in Doha? Are you surprised by it? And the kind of rebound that we have seen in crude oil prices after that knee-jerk reaction when the price has almost declined 7%. How do you read that?
Well, I think with the Doha meeting, we never expected that it would have any impact on the actual market fundamentals because, as has been mentioned by your other guests, even if they had agreed on a freeze at January levels, as they initially indicated, January levels were when most of the producers, including Russia and Saudi Arabia, were producing at close to record high levels. So a freeze would not have made any difference in terms of the demand-supply fundamentals. But I think the one thing that the market was hoping for positively in Doha was that it could lay the political groundwork for OPEC and non-OPEC producers to cooperate further in the future. And that doesn't seem to have happened. So, it was a disappointment with the Doha meeting, but and prices did react to that. But prices have rebounded mainly because of the Kuwaiti oil strike and the cut in Kuwait oil production. We don't expect that the strike is going to last very long. So I think right now, in the very short term, that's the crux. If the strike is prolonged and Kuwait oil production and particularly exports are affected, then I think that will support oil prices. But if we see the strike end shortly, I think we're going to see prices slip a couple of dollars because fundamentals really have not changed. We're still in a very oversupplied market.
Point taken. Azleen, but would you say that we have seen the lower point for the near term, for 2016 at least, and from here on it is more about volatility, but prices can be on the higher side?
I think so. I think that it's unlikely, unless something major happens, it's unlikely that we will revisit the mid-20s level that we saw earlier this year. So the market seems to be a lot more comfortable around the mid-30s level. Our expectations is that we're not so bullish on the market. We still see that prices for ICE Brent would be around the mid to high 30s over the next few months. Fundamentals will improve in the third quarter, mainly because we expect that shale oil production and non-OPEC production to fall. So that will help reduce the oversupply. But we do think that the market will still be fairly weak, and we still see prices below $40 on average for the rest of this year at least.
So, Azleen, with the major events now done, and as you said, the start-off process is what you call the Doha meeting, as has been the case with our other experts as well. What would you want to watch out for? Is it going to be the demand that's coming out of Asia and India, as we all have been talking? Is it going to be about the Fed rate? Is it going to be further statements from Iran, Saudi, US or Russia? What would you want to keep an eye on as far as the crude oil prices go?
I think for demand, it would be something that the market will watch. And yes, our expectation is that the demand from India is going to be very strong, especially for gasoline. Demand from China has been quite disappointing this year, so it's not been as strong as the market expected. But demand, there is demand growth. We've always expected that demand would grow about 1.2 to 1.4 million barrels this year on average. So there is demand, although the market's oversupplied. I think that right now, what the market will look at will possibly be how quickly Iran can increase production by to the 4 million barrel target that it has publicly said. Yeah. So I think that they've already started to increase the production, the exports. Now I think the market wants to see if it can hit the 4 million, how quickly. And if it's slower, then the oil prices may not fall so much. If Iran just rapidly increase its production as exports, I think that's going to put a bit of pressure on the market. So I see Iran as still the big issue on the market.
Your point is well taken, Azleen. Thank you so much for joining us today. Thank you so much to Shar and Mr. Taneja as well for being part of this discussion. So what we're taking away from the discussion really is that the Doha meeting has been on expected lines. It is just the start of a process here. Iran supplies have been factored in by the market. Kuwait strike may not go on for a very long time. Fed is something you can keep an eye on, but most importantly, Asian demand is something that will drive the prices. In the meanwhile, it's going to be between $35 to $45 per barrel on the higher side, a range that rest of 2016 will work with. With that, it's a wrap on the Crude Reality. Thank you so much for watching. News and updates continue on CNBC TV at 8.